right, people. Welcome to another episode. Hope everyone's doing well tonight. Happy Friday. We're going to get into things in a second here. Make sure you guys like, share, and subscribe. You know the routine. So how we're going to do this tonight, we're going to do go over some news first. It kind of pertains to this week as far as Forex and geopolitical stuff. We got some updates with the coronavirus, how that's going to pan out for next week. We'll talk about that. Definitely had an impact on the U.S. markets, equity markets today. I think Dow closed down 600 points, though that's literally nothing. You know, it's been on a tear since last year, since essentially Powell turned around from his, interest rate hikes. He had a schedule that he was going to stick to, and nothing was going to change that. But all of a sudden, we get a change in language, and ever since then, we had a huge drop, 20% drop in the Dow in the equities, and then turned around. It's been going up ever since, and we know exactly why. QE, not QE, whatever you want to call it. Federal Reserve intervention. If you guys want to give me a call, you can do so. Number on your screen. I'll be taking calls tonight, of course, as always, when I do live streams. Let's get this game started. All right, we got the Super Bowl this weekend too. Forgot about that. I don't even watch sports anymore. That's crazy. But we're gonna get started here right now.
Fuck it. Do it live. I'll write it and we'll do it live.
Okay. Ready?
Fucking thing sucks. We'll do it live.
Okay. Yes, we will do it live, people. Hope everyone's doing well tonight. Happy Friday. That's my second cup of coffee. We've been working hard today. But today we're going to be looking at this week. Pretty good week. Last week I think didn't do as well, about 60 or so pips. And maybe we'll go over what pips are so you guys understand that. I don't know where everyone's level of expertise is in this foreign exchange market, but I've been trading Forex for about 8 years now, and it's been a lot of trial and error. So it's a game that takes a long time to get good at, and it's something that you never fully perfect. It's something you always have to just keep your edge on. And for me, because I'm a algo developer, I always have to keep those strategies, those ideas, and refining those strategies and keeping those things sharp, because conditions change. Like this week was great though. We had a lot of volatility. I don't know, many of you may not know, there was actually Brexit today. So Brexit, UK actually officially left the EU. So we're going to look at that. That's pretty big news. Now, it doesn't happen like instantly. It's going to be a process over the next 12 months, I believe. So we'll take a look at some of those details. But yeah, Brexit is done. I can't believe it. Now, and maybe we'll talk about, I remember I was trading FX, when Brexit first, the vote to leave the UK or the EU passed. It was a surprise vote, and let me tell you guys, the volatility on that night was like none other. I don't think I've ever. The only other time something was even close was when the Swiss bank, Switzerland, came out of nowhere and said they were unpegging their Swiss dollar, or Swiss franc, I should say, to the euro dollar. I remember that. That was a huge move as well, but it was nothing compared to what happened with Brexit and the pound, and pound yen as well. I think pound shot up over 1,000 and something pips in less than, I want to say, like half an hour. Crazy move, guys. Like, I'm talking 8%, 6% moves in a currency, which is insane. That's normal for crypto. We know that, but for a national currency, it was insane. And so, yeah, I never forget that. Made some good money that day. Thank God. And it wasn't even, at that point, I was trading on MT4. I had algos running over there, but I wasn't even, it wasn't planned. You know, it could have easily gone the other way. Money Machine Gun, what's going on, brother? He says the Thai baht took a big hit against the US dollar, but in the exchange both here in Thailand, it shows no change from 29. Okay, gotcha. He said, what do I think in the long run? So I don't trade that pair. I trade pairs that have smaller spreads, you know, tend to be smaller spreads, and higher liquidity. I don't even know if my broker has that pair, to be honest with you. I have to look at what's the actual ticker symbol. What's the currency symbol of your currency, the Thai baht? Let me know in the comments and I'll check it out. But let's go ahead and take a look at, I want to take a look at, I gotta update this chat here as well. Take a look at a couple of news feeds before we get cracking, because I got some trades for you guys to check. Man, this week was good week. Would have been even better, and I'll show you why. I talked about this actually on what night did I? Thursday morning I did a live stream, because we had the UK. We had rate decision come out UK. It was Mark Carney's last formal release or statement, because he's leaving. He's being replaced. And so good action. Go back and watch that video if you hadn't seen it. It's the last video I did for the My 2 Pips live stream, and we traded it live. So it was really good. A lot of pips gained in that session. So check it out if you missed it. We'll go through it today as well. But Christian McNair, what's going on, brother? Did Brexit happen already? Yeah, it happened today, officially. It happened today. So yeah, it's done. I mean, the process is starting, I should say. So if you guys see on the screen here, Daily FX, I have an article about that departure of UK from the EU. So essentially it happened today, as I stated. It's been 3 years in the making, a lot of drama, a lot of, it's crazy, because this is how you know voting really doesn't matter. Because if the vote decision doesn't go in the powers, that be, if it doesn't go in their direction, they want to do revotes, recounts, they want to impeach people, you know what I'm saying? That's going on here in the United States. They want to do all those types of things when it doesn't go their way. When I say their, meaning the deep state. And it's not necessarily like one hidden secret Illuminati group. Nah, that's not what it is. But you have people that are embedded in these different governments around the globe that they don't have re-elections. You know, a president only has a max 8 years here in the United States. I don't know what it is in the UK, but you've got people that are in Washington that have been there for 30 years, 40 years. Okay? They're not going anywhere. So that's the deep state. Those individuals that really kind of run policy. And so that's what happened with the Brexit. You know, I mean, the people voted. They wanted to leave the EU. They felt like it was more of a benefit for the EU to have the UK versus the UK being, you know, in the Eurozone. So they voted. They said, yeah, we're out. And they didn't like that. It was a shock. It was a shock to financial markets. Definitely wasn't priced in on the pound. Again, I told you, pound went up 1,000 pips in like 5 and 10 or 10 minutes. And listen, 1,000 pips. It made a lot of people a good amount of money for that year, and it demolished some as well, because you got to remember, even if you're if you're trading and you have a stop loss in, when you have a violent move like that, let's say people that were short the pound at that particular time, it was so violent, the move, that on many brokerages, it blew past many people's stop losses. So stop losses didn't get filled until there was sufficient, at that point where it could be filled. It was so much volume. So you could have been filled 400, 500, 600 pips higher than where your stop loss was. It's crazy. No, man, I didn't see Nigel's speech. What did he say? What did he say? Let me know. I didn't see it. So, yeah, there were like 2 more votes on the Brexit deal. And, they ended up still going with it. Thank God. Let the people vote, man. Let the people have their voice. Because if you're gonna be that blatant with it, you can't be that blatant with your voting scheme. You gotta at least give the people the feeling that they have some level of choice here, even though we know they really don't. But so as I'm talking about this Brexit thing, here's the timeline. So January 31st, Brexit day. That was today. Deadline for the UK to leave the EU. Brexit deal will also need to be ratified, but again, that's just kind of a formality. Nothing really important here. Just kind of for show. But February 25th, the EU member states are expected to approve the negotiating mandate, enabling talks to start at the beginning of March. And so in March is when things really start to kick off. You'll have the European Parliament plenary session. And then really when it happens is June 30th. Transition period deadline, the final date that the UK can ask for an extension of the transition period. The maximum extension available is 2 years. So guess what? You know what politicians love to do, people? They love the can kick. They already can kick 3 years with all this voting and going back and forth. You better believe June 30th comes around, they're going to can kick again, without a shadow of a doubt. That's why today really wasn't like the move that you saw in the pound trades, which most of my algos run on pound pairs. But the moves you saw in the pound were more so from the news that came out on Thursday morning here in the United States. With that Mark Carney, the rate decision, they decided to stay unchanged, and some other news came out in the UK zone as well, which really fundamentally kind of kick-started everything off. The pound started to move prior to the news, like leading up to the news, and we're gonna go through that in my trades for the week. But as you guys saw, 160 something, 126 pips this week. So very good week. And we're going to go through all of that in a second. I've got another article I want to show you, though, before we get into that. And that is this whole coronavirus thing. I don't know if you guys have been keeping up on this. I watch and follow Chris Martinson from Peak Prosperity. Good channel. Very level-headed channel. Knowledgeable guy. That guy is so smart. So he put out a video this morning. And maybe I'll try to find that video for you and link it. Yeah, let me do that but while we're talking about it. But he put out a video this morning. His background is that his channel is all about finance. But his background, ironically enough, is pathology. He has a doctorate in as a pathologist, or dealing with viruses and stuff like that. So it was interesting. This is an interesting topic for him because this is right up his alley. So he's been dedicating most of his videos lately to this situation. And I'm going to link this to you guys so you can watch later. Where is...
Hi, I'm Dr. Chris.
Let me see here. So you guys check this out. This is major right here. I'm dropping it in the chat room now. So you guys check that out when you get a chance, because this is huge. It's already got 71,000 views. His videos lately have been getting like 1 million views. Really informative. But essentially, this is a crazy thing. The virus is more serious than the governments are leading on. And if you think about it, it makes sense. China, they've been blocking off roads with dirt, shutting down full cities. Wuhan, 11 million people shut down. It's like New York City being shut down twice over, or maybe even more than that. But so you got to look at the actions. You got to look at the actions of these governments and not what they say. And I just heard actually that the United States just declared an emergency as well, finally, because they got this information. You better believe they got this information. So let me show you this really quickly. I don't know if you guys, let's see, you should be able to see this. Yeah, John Hill, definitely. I think the top is in on the stock market. They can't print their way out of this. This is not fear. This is not greed. This is a need. No, I'm not trying to rhyme like a politician, but it's the truth. So check out this. Look at this, this table. And this is why I want to talk about this really quickly. This table illustrates here the R0, or from what I understand is the propensity for it to spread. So I think the flu is at a R0 1.28, I believe. That's the influenza virus is at 1.28. So essentially it means that, first person at 1.28, first person infected, the second person gets infected. Well, after the second person, they're more likely to infect another 1.28, or actually after the first person, the second person, 1.28 people are infected. After the second, 1.68 more people. After the fourth, or at the fourth, 2 people. At 5, 3, 3, 4, 6, and it exponentially goes up. There's new data out that's saying that this coronavirus has an R0 of 4.08, almost 4.1. So that's at the bottom here. So after the first person is infected, he's likely to infect 4 more people. After the second person, 16 more people. After the third person, 64, 256. We got 12 or 10, 24. After the 7th person, 4,000, and you see it grows exponentially to numbers just out of control. There's not even that many people on the earth after 10. So you see what this can do. Now this report also states that the mortality rate is like 6% instead of what they're saying right now, 2%. So that lets you know, man, it's a serious situation in my opinion. And markets are going to, I think, reflect that. China, their markets open back up Monday. This is why you don't want to hold stuff over the weekend, though, because you can have some major gap ups and gap downs in the currency market and in equities as well. So you want to close your positions at the end of the day on Friday, or right before the end of the day on Friday, because you don't want to have any surprises coming Sunday. So, as I stated, the virus continues, and it's going to affect more so equities than I think currencies. I think the dollar will become a little bit stronger, or at least treasury yields will drop further because people will flee to bonds. So I think that's probably the only thing you're going to see, because the Dixie, the dollar index, actually hit a pretty was hit a low point. I believe it broke under 98. I believe the dollar in the Dixie index did. The dollar index broke under 98. So dollar is losing some steam. But if next week things continue to pick up, we all know, or you should know, that the Japanese yen is a safe haven currency. So anytime there's like a crisis in the world, you're going to have money fleeing to the yen and fleeing to the dollar. So any pairs like euro yen, you want to short euro yen because that's essentially buying the yen. You want to short euro yen. Pound yen, you want to probably short pound yen. Any pair versus the yen, you want to short. You definitely want to short. Now the US yen, or they just call it the yen, the dollar versus the yen. That one's going to be a toss-up because, again, people head to the dollar for safety and the yen. So, it's kind of a toss-up on that one. So let's go ahead and take a look at these charts, people, for the week. 126 taken home this week. Give me a call, actually, as well. If you guys want to talk, you got questions or anything, we can talk about that. But as you can see, well, maybe you can't see, but now you can see. We have pretty good trading week this week. I've had better, but this is a good week. Definitely a good week. 126 pips is excellent. So just kind of going back, as you guys can see here, this was interesting because Thursday, this is a euro yen. Euro yen actually didn't do well this week for me. I think I ended up losing pips on the euro yen. But I'm going to talk to you guys about also this data is actually not even truly reflecting of my actual trades, because you'll see remember those dots that I have drawn up here? This is my additional algo, take profit blood ATM algo. As you guys can see at the bottom there, that last indicator that's on the chart. Well, those dots mean I've taken 25% off of my position each of those trades through those trades. So like with the short here, that blue dot, I took 25% of my short off. Here as well, took 25% of my short off, and then it finally kind of went up and closed the short position. So I actually made a little money, or lost less than what is reflected here. Same here. Went long here, took some profit up here. 30% on the longs, 30% here off the table, ended up closing down here. So this is not a true reflection. And the reason why I can't show that is because TradingView, man, is still, it's fairly new. It's on version 4 of its Pine script, and I'm actually in talks with their support system their support team, because I'm having issues figuring out how to close partial, like a portion of my trade, not close the whole thing. It's just weird. It's quirky how they have it set up, the language, where I can't just easily say I want to close half the trade or 25% of the trade. It's not working properly. So they sent me a sample of code. I asked them for a sample because we kept going back and forth, but they sent me a sample to go off of. I looked at it really quickly. I got to go through it over the weekend, but it didn't seem like it was, he fixed it. You know, he illustrated to me that the issue was fixed. It actually looked like it was doing the same thing my version of it was doing. So we'll have to see what happens with that. But yeah, that's why I can't truly reflect it in the strategy that you see at the bottom here. So those numbers are actually even better. So euro yen, again, this week was not a great week. If we go all the way back to the 26th or 25th right here, yeah, 26 is when we started, and as you can see, it's pretty much was in a tight range. So it wasn't a lot for me to take advantage of here. I mean, we go back, this is the beginning of the week right here, and this is what we were inside of the whole week. Okay, so this was a tight range, what they call consolidation range for the euro yen. About a 56 pip. That's small. For a whole week, the euro yen's been in a 60 pip range. And again, it's good that I have the take profit algo overlaid on here with those dots, as I've stated, because I'm able to still take some money, extract some value, some profits out of these sideways markets like this, because other than that, I would have just been losing money going back and forth. Christopher Ladd, what's going on, brother? What do you agree with? I didn't oh, you're talking about the top of this, what John Hill said? Yeah, stock market is top. Absolutely, I agree with that too. I definitely agree with that too. So yeah, euro yen didn't do much this week. If we take a look at the next pair, this is the pound yen. And I don't know, those who were on the live stream Thursday might have remembered when I said, because we ended up going long. So this was Thursday, and this was the big news Thursday morning. Pound rate decision, UK rate decision. This area right here. This is leading up to that and after. So on the pound yen, I have a delay on my long positions because, you know, statistically, just back testing it, it seemed to be more profitable to delay my long position as the sentiment changed. So I have a huge delay, and I knew right away. I said, man, because we were like right here, and I'm like, in my live stream, I'm like, yeah, I'm probably gonna get in late and get tapped out of this position, and that's exactly what happened. I got in right here, and this is my stop loss right here. That's my stop loss, that line right there. So it got tapped out. So we got tapped out and ended up heading higher. If we were, if I could have stayed in that position, even at its peak, if it didn't go down as much, we were still talking about let me see. Yeah, that's it. That's about it. So we were still talking about 50 pips that I missed on that trade, and even more if I would have gotten in with no delay. But statistically, I found doing back testing, you have to go off of not one event. You don't create strategies to match up to one event. You got to look at strategies and create strategies that over time, over a longer period of time, are profitable, not just one event. So you don't worry about it not working out for one event. You're not going to get every event. So that would have been a total, if it would have gone long right at the sentiment change, 130 pips just on that trade alone. Just on that trade alone. But that's fine. we made some other decent trades this week. I think we ended up a net. And we'll look at the weekly performance here in a second, but I think it was like maybe I lost 30 or 50 pips on the pound yen as well. Actually a decent amount of consolidation this week as well. Didn't move until Thursday. So the next pair we have, this is my baby right here. I told you guys Thursday, I said when this thing actually picks up a trend, and I'm referring to the pound, and I'm gonna zoom this out for you guys to see. I'm referring to the pound Aussie. The pound Aussie pair, when there's a trend, many times there isn't, but when there is one, boy, you are gonna make some money. You are gonna make some moolah on those trades. This is the beginning of the week. Started the week out strong on the pound Aussie, as you guys can see. Right out the gate, went long on Sunday, and I said, and actually during the week in a live stream I did earlier this week, this is the drawing I had prior to this move even happening. We were literally like right here, and those who were watching my live stream on, I think I did it on Sunday or Monday, can't remember, I think it was Sunday, but I talked about this. Go back and look at it. I said, and I drew these trend lines for us, and that's exactly what it did. It bounced right off the bottom one and accelerated higher. And the reason why, as you can see with this line here, these red lines, I'll change the color here really quickly so you guys can really see this. Another channel. We were in a channel from last week, and I said if we break out, either way, it's going to be a huge move. And that's exactly what happened. So with this pair, it moved up very nicely, broke above, and I said it was gonna, go to that next area of resistance. Well, it broke above that resistance, and that resistance becomes future, or present resistance becomes future support. All right, so that became support for about 2 days. And then we kind of broke it here, and that's when we closed the trade. So from here to here, where we reversed our trade, that was 80 pips, 84 pips in that trade alone. And then from there, it was a kind of net nothing gain there. It was actually a little bit of a loss on that second trade because we didn't really go. We started to trend inside the second channel. All right. But this trade right here, this was a almost 2.5 day trade. Look at that trade right there. And we got 10 pound online. I'll get you in the second 10 pound. That trade was a 455 pip trade. Now, the reason why that doesn't fully reflect in my trades this week is because I actually took profit. I took a little bit more profit off of that trade at the peak right here, like right before, like right around here. I took half off the table. I haven't developed a take profit for this particular pair yet. I'm working on that. I hope to have that done next week. But that was a huge trade right there, 400 pips. Okay, and we're going to talk about what pips mean to an average trader. Let's say if you're starting out, what does that mean? What does that look like in money? Well, we'll talk about that in a second. Next trade, pound dollar. Good week for pound dollar as well. If you guys recall, this was during my live stream on Thursday morning. I had circled this area that morning. I said, this is my take profit algo, saying that we're going to be taking some profit soon. And sure enough, we exploded higher, took 30% off the table here, and ended up taking the rest off right here as we switched sentiment. All right, so first trade from Thursday going into Friday was 100 pips. and we tried to go short, but then the long took back over. And guess what? Just today, we got another 62 pips, 64 pips, give or take. There's 160 pips from that pound trade by itself in a day and about a day and a half, almost 2 days. On the short side, we did okay. It wasn't much, about 40 pips. Wasn't bad. That's good. That's good pippage. And then that was a kind of a net zero there. Actually lost a little bit on that long trade right here. And that was it. That was the sequence of trades for pound dollar this week. Let's see here. This is the euro pound. I think we made money this week on the euro pound, or maybe it broke even a little bit. I think we made money because this is the beginning of the week here. Went short, got tapped out here. I'm gonna zoom in. We got tapped out here on the first trade of the week. Went short. Actually didn't get tapped out. We just switched positions, but almost got tapped out. It was very close. Went long here. Very good trade. That was roughly 18 pips. Took profit up here though at 27 pips. Took up about 30% off there. Short went in the wrong direction on us. Long went in the wrong direction. And this one was kind of a nothing really happened there for us. This long was we took profit up here. That was another 20 pips. But this was actually Thursday. This was Thursday morning as well. We went short because again we were essentially going long pound because we went short euro pound. Remember the pair on the right side means that if you're shorting it means you're actually buying that pair. All right, so that was in our favor, and that trade took us all the way down 55 pips. So that was a good trade there. We took some profit here, about 30 pips in. And that was pretty much the end of the week. Another loss here, but not bad on the trades there. So let's get 10 pound in here before we take a look at the actual weekly performance. 10 pound.
What's going on? How you doing, Crypto Boy?
Good, man. How are you today?
I'm doing all right. I'm just growing, attaining knowledge, man. Just day after day, trying to do better than yesterday. So
hey, I feel that definitely.
And actually, this whole idea about pippets, growing on the decimals.
Yeah, man. You want to talk about that? I can explain that if you need some more clarity.
Dude, I completely understand because as a cryptocurrency trader, that's exactly what I operate on right now. I'm practically gaining off of fractional pippets, so I completely understand what it means. But go ahead and elaborate for your viewer.
Yeah, man. So, I never put, I made X amount of money this week, or that's irrelevant to you. What you want to know is how many pips I made, because then you can easily transfer that into what you trade.
Exactly.
You get what I'm saying? So let's just say you're starting out with Forex. You want to get your feet wet. Let's say you have a $1,000 account, even $500 account, if you want to say $500 account. What I suggest is that you start off with something like, with a $500 account, you can start off with, I would say, 0.05. So that's 5 micro lots, or half a mini lot. Okay, what that means that, one mini lot, 0.1 lot in your brokerage account when you're going to place a trade. I really suggest you guys use MetaTrader Mobile for your placing your trades. It's just the easiest interface. MetaTrader, the desktop version, is a nightmare. It's just completely convoluted. It will confuse you. MetaTrader Mobile is the best way and best interface to place your trades. But anyway, when you go to place a new trade, it'll have at the top in the middle like a number, and then you have a minus on the right. You can go down or you can increase, increment. So if you have 0.1, that's one mini lot. So that means for every pip up or down, that's $1. So let's say you enter the trade, you're going to enter the trade in a negative because that's your spread. That's how it works in Forex 10 pound. So you enter the trade in a negative. I mean, that's pretty much how it is in pretty much everything. You enter the trade in a negative because you got your spread. However, in this trade on FX, that commission is round trip. So that they take out both you getting in and out at the beginning, if that makes sense.
Yep. Of course, just about every single trade that you make, regardless if it's Forex or any index, you're always going to start off with the loss because you got to pay to play. So with that being stated, it's kind of like the idea of Gwei to Satoshi's, you know what I mean? Yeah,
kind of.
Yep. It's about the size of your gains on the sub-decimal level.
Right, exactly. So if you were trading, like my algo, I trade 5 pairs, right? So if I use that example of 0.1, one mini lot per trade, your overall exposure at any one time, the max exposure would be half of did I say 0.1 or 0.1? Yeah, I said 0.1. So that would be half of a lot, or 0.5 lots.
Now, hey, go ahead and elaborate for the audience. What is the difference in value or accumulation between pipit and a lot? Like, what's the decimal move? So
a mini lot is going to be 1 decimal place over. So 1 lot is 1. You don't want to do. You most likely, even if you have an account, let's say you got 20,000 in your account for trading, I would not trade starting out. Do not trade lots. That's $10 a tick up or down. Okay, you move 10 pips in one direction, that's $100, and it'll move that in a couple minutes, just randomly. So you don't start off with 1 lot. So you want to start off lower than 1 lot, probably like a mini lot, 0.1, and that's $1 per tick up or down, or 1 pip, right? Per pip. And then you have micro lots as well, which is 0.01. So that's 10 cents per tick up and down.
So that's about 1,000 pips.
Well, I wouldn't look at it that way. Yeah, you could look at it that way. Yeah. It's 100th of a 100th, not 1,000. 100th.
Okay.
Of a lot. Yeah.
It makes sense.
Yeah. So I would, if you're gonna start off trading, test the waters. Start off with something like a micro lot. It won't hurt you. You lose. Let's say you're just playing around with 0.01, and you got the trade and it goes against you 50 pips. You only lost $5. No big deal. If you had a 0.1 or a micro lot, you would have lost $50. If you would have had 1 lot, you would have lost $500 in that particular trade. So that's how it works. So that's how you can translate it. 126 pips for the week I took home. That depends on how many lots or whatever I'm trading. And you'll equate that. If you're trading again, 0.1 lot per trade, that's half a lot per trade. I mean, at one time you could have on the table possibly, right? And so you can kind of do the numbers from there.
Makes sense. Hey, so I was chatting it up with one of my friends that I met at a party recently, and he was talking about trading and whatnot. And of course, I'm looking out for your boy Crypto Blood. I sent him your way and whatnot. He was wanting to get into Forex and also buying stocks. And I was like, oh man, I'm sure Crypto Blood might actually want to, get him in on his calls for Forex. So,
you guys, I do have the calls available. You can sign up for that.
Yeah, totally. But I was wondering, man, like, on your website specifically, it doesn't actually show calls. Like, I'm not sure if you need to like update that, like, but it'd be a good thing to have it like showcased on your website.
Yeah, I don't have the FX on there. There is a link. I don't think it's linkable. I don't think it's visible to the public yet. Nope. So I do have a page where I have like performance and stuff and all that on there, just like I do for my crypto one. But I don't think it's live yet. I don't think I have it live there. So I'll have to do that. But yeah, he can sign up. There is a he'll get a link of my chart, so you visually see the trades going through. You'll get a link to that, and then you'll get alerts for each trade in Telegram.
Makes sense. I feel it.
Yeah.
And also,
so I'm gonna definitely update the site to show the FX performance for sure.
Yo, do that, and plus, if you could like follow up with an affiliate program, that way I could just like shoot more homies your way, and we could do business that way. Like, bruh, I would be all for it.
Oh, I hear you. And you know what? I've never been into really the affiliate stuff, because it's not. I mean, of course, I'm an entrepreneur. I'm a businessman, but you know, sometimes that affiliate stuff can get a little weird. And the reason why I even started doing, I've been trading FX for longer than I've been trading crypto, but the reason I started doing videos is because I've been seeing so many scams on YouTube, on Instagram, more so on Instagram. You see people that saying they're FX traders. I'm like, bro, you are not an FX trader. You do not know this life at all. And they're making money off of referring people, they're not even trading.
Yeah,
they're really just making money off referring people.
That's the thing, bro. Like, you know what's good though. Like, you actually got the science and you got the knowledge to make sure that people are going to be profitable with your calls. So you know that right now, as a matter of fact, if you were to run an affiliate program, you got the sauce to back it up. You know what I'm saying? Yeah,
I'll think about it, man. Definitely. I'll definitely think about it. But it's optically, man, I'm not for all that weird stuff, bro. But yeah, I hear you though. I hear you. I'll think about it definitely.
Well, I'm just saying it because of the fact that, you know, word of mouth marketing can actually make you go parabolic, not only in your videos, what you're doing right now, but also when it comes to getting your bag up, dude. Like, and also whatever else you need to drive content to and create with. You know, it's about getting your list up, dude, getting that email, or you know, whatever else, whatever platforms you're on, getting those numbers up at the same time. So
right.
Yeah,
no doubt.
I'm just thinking from a marketing standpoint, not just from a bag standpoint. So yeah,
no doubt. You speaking facts. Absolutely. Absolutely. So let me, I don't know if you can see the screen. I don't know if you're in front of your screen or whatnot, but I'm going to walk through the trades for the week really quickly so people can see. 'Cause I have it down to this actual week. So this was the pound Aussie 200 and right now I have it at 10,000, which is one mini. That's another thing I failed to explain to you guys. So in dollar amounts, that's why you'll see, like, when you open a Forex account, if you open a $100,000 account, that's essentially saying, okay, I want to trade lots. So one lot equals or equates to $100,000 for that particular trade. So you're literally borrowing $100,000 from your broker to place a trade to go, let's say, long euro or EURJPY or whatever. So one lot represents 100,000 on that particular position. 0.1 equals $10,000, and a micro lot equals $1,000 on that particular position. So that's just for you guys to understand how that works. But yeah, so I got it at 10,000 just to show people at one mini how much you would have made this week. That's 0.1. If you would have traded 0.1 lots, you would have made roughly 250, and that does include $250. That does include a $1 commission, which is very close. Depends on the pair, but it's very close to what the real commission would be. It's normally a pip or a tick. That's usually the spread. It's like a tick and a half. Depends on the pair again. Some pairs are a little bit more expensive. Some pairs can be under a pip or a tick. So just kind of give you an example. But yeah, $250 you would have made on one mini. Now, like half a lot, you would have made $12.71 on that one pair for this week. Okay, and going on to the pound dollar, you would have made $109 with one mini, or at like a half a lot, you would have made $582, or at one lot. And you build up to these numbers. You don't try to go for the gusto out the gate. You build your account up, and when you guys sign up for I call it the quant game. Now, I'm not calling it trader game. It's a quant game. When you sign up, we'll go through this stuff, and I'll show you money management and how to scale up your position. So you start off where you are, and then as you grow, you scale your sizes up. So at one full lot, you would have made $1,174 off of that one pair. Pound dollar. Okay. And if I'm just gonna go back so you can see, get an understanding on the pound Aussie. We do 100,000. You would have made yourself 2,500 just on that one pair.
Hey, could you elaborate on commissions, shippage, and limit orders?
So slippage. So my orders, I do all market orders. So there will be some slippage, for sure. However, if you look at slippage, really only counts or affects your projected revenue if you have a lot of trades. Like my systems I develop our swing trading positions or system. So as you see here, like on the pound Aussie, there's only 3 trades for the week. So even if your slippage were, you had a slippage of 1 pip, 1.5 pip, or half a pip for each of those trades, it's like 2 pips difference, if that makes sense.
Okay.
Does that make sense?
In a sense.
Yeah, so the more trades you make in a duration, the more the slippage is going to affect you, because that's every time. Like if there's slippage of a pip or 2 and you had 1,000 trades, I'm just over exaggerating, but you had 1,000 trades, that's 1,000 pips worth of slippage.
I completely get it, because where you bought in was above market value, because you're buying up and then the market's going to trade down from that position instead of you buying a limit, because you buy market.
Yeah, I buy market just to execute, because again, I'm not looking at the fine details like that. Now, if there was a scalping strategy, those are the things you have to really keep in mind. If you're looking at algos, you guys are out there shopping and looking for different trading signals or whatever, and you have a scalping system, you have to be very careful with those scalping systems, because their modeling is not going to have, they may have slippage, but when you're talking about trading that much, man, the outcome is going to be very different. If you trade 300 times in a week, your slippage plus commission, you could be literally talking about a deduction in your profits of like 300-400 pips of whatever you made. So yeah, you gotta, and so that's really why I don't really mess with any scalping systems. It's just too hard nowadays to really be proficient or efficient in those scalping systems on a live account. On paper, yeah, it's gonna look good.
What do you mean by on paper? What do you mean? Because of the fact that you're just gonna have better margins, or what do you mean by that?
On paper, it's gonna look good because you're slippage. You're not accounting for real slippage.
Okay.
Or even if And I think in most cases, a scalping system is definitely going to have a market order. They're not going to wait. You can't wait because the margin for error is so small. You got to get in right when your indicator tells you to get in and get out right when because you're only talking 10, 15 pips. You can't be waiting for a limit order to hit and it never hits, and just all types of stuff. You know what I'm saying? So yeah, it's more complicated too. You would have to forward test for sure. Have to forward test a scalping system. Meaning forward testing means you would have to trade it live for a substantial amount of time to make sure it's a good scalping system. Not saying they don't exist. They do, but
But you want to actually forward test it. That way you can actually have a reliable system automated.
Yeah, you want to forward test everything. I forward test all my stuff. Minimum 3 months. So I forward test before I start talking about it or anything. I forward test, and that still doesn't even guarantee that in the future it's going to continue to be profitable. I have to always stay on top of it. It's not like I sit there for a couple hundred hours, make an algo and just kick back and just be chilling. Nah. You have to just stay on top of it. Look for ways to improve your strategy. Not necessarily change the core strategy of your trading system, but just look at ways to extract more profit from it, like I've done with the take profit thing. The take profit algo that I overlaid on my original algo is something I came up with like 2 weeks ago.
Okay.
To extract more gains out of my trades when I have a situation when the markets are kind of trending sideways, or I want to risk more per trade because I know my take profit algo is going to take money. It's not going to allow the trade to stay open that long. The longer you're in a trade, the more risk you're involving yourself in. And so really the ideal strategy is to have a strategy where you're not holding positions long. Ideally, a scalping strategy would be the best, but they're hard to come by and not reliable long term. They break easily.
Is it because of the nature of the market?
No, it's just because of the lower time frame you go, the harder it is to model that consistently and keep that model profitable. So if I make an algo tomorrow, I can make an algo tomorrow that's like crazy profitable. I'm talking about profitabilities of upwards of 6 or higher, 7, even up 8, 8.5 profitability, 10 profitability. But I'm trading on not an hour, but like a 4-hour candle, or a day candle. If I'm trading a day candle, I'm creating an algo on a day chart. First of all, I gotta have a stop loss of 100 pips, something like that. You know what I'm saying? Because you gotta give the higher time frame you're trading, the more room you have to give for the market to move before it goes in your direction. If that makes sense. If I'm trading on a day chart, I gotta have like a 70, 60 pip stop loss. So I gotta be willing to lose 60 to 70 pips on that particular trade and wait a week or two for the trade to go play out before I can make some money.
Why that long?
Because you're waiting when you have moves on those types of timelines or time frames, it takes longer for them to play out. So I'm just going to use a simple one. If you have like a simple moving average cross below, that means you want to go short or whatever on a daily chart. It may take like a whole week before it actually moves down. It may go back up towards that simple moving average and maybe breach it a little bit, then come down, then each day candle, that's another day, right? So you got to let that thing play out over a week or so or more before you even see it move downward.
Okay, I get you.
Yeah.
Hey, Swam, I have a question for you. How do you think that this new digital yuan system is going to affect Forex?
That's a good question. That's a really good question. I don't know yet, man. That's a good question because I don't know if it's gonna have the same value as a regular yuan, the CNY. I'm not sure. I would assume so. So maybe there isn't really a difference. There maybe it won't be a real difference.
I know, right? Maybe it's just the way it's settled that might actually determine.
Yeah, that's what I'm thinking. I think it's just more of a transactional layer that's just more efficient than the current dollar, the current, fiat they have. That's what they've been pitching it as anyway. Yeah, I don't think it's going to have I'm assuming it's going to have the same value, be paired or parity with the yuan. That's what I would assume.
I think that they were trying to create the digital yuan to be backed by gold.
I don't think so.
There
was rumors of that. They wouldn't do that though.
Well, why wouldn't they?
Because see, gold restricts central banks. There's no gold is like a handcuffs, fisticuffs. It's like you being in fisticuffs. It restricts them from expanding the money supply or contracting the money supply.
I disagree with that statement because of
it's that's fact. Like if my currency is backed by gold, I can't just go out and expand the money supply like central banks do now, because I have to have gold that reflects that increase in money supply.
Totally, yeah.
Expansion.
Yeah, of course, that makes sense. What you're saying definitely makes sense on that respect. But like when it comes down to the price of gold, the way it's valued, like let's say, for instance, your currency obtains far more value, not because you printed it, just because of the fact that the market's reflecting the value of that increase because of the fact that you've made that change. Wouldn't you agree that would quite possibly poise a central bank to obtain more tangible physical metals or commodities, other commodities, such as how the dollar is in relation to the petro market?
Sure, but you're talking about, that pertains more so to, that's almost more fiscal policy, but monetary policy, no, it restricts them. It restricts them monetarily,
it
because they
from inflation.
Both ways, it restricts them. Yeah, I mean, it restricts them from running inflation, right? And that's what they love to do, because when you can run inflation, you can steal from the people.
Exactly.
And their purchasing power. You can't do that with a gold-backed currency.
Totally. But here's the thing. I believe right now China is in the point of deleveraging and deflationary markets right now. Like, especially when you see all the, smart cities they have built right now. The fact that they're pushing for cashless societies. They're literally just trying to get rid of any form of paper transactions. They also have a majority of the Bitcoin mining infrastructure over there. Like, I think that they're literally deleveraging right now. So, and trying to deflate their current economy. So, but that's just my 2 cents.
Oh, I mean, they're definitely deflating they've been doing that. They've been deflating or devaluing their currency. That's how they're able to, that's why you have so many billionaires coming from the East. Because they're printing money they've been printing for the last 15 years. They've been printing money like crazy. And what are they doing with that money? They're going and buying real assets. They're coming over here. That's why half of freaking New York is owned by China. That's why California is owned by China. They've printed up so much money and come over here and purchase real assets with it. They wouldn't have been able to do that if their currency was backed by gold, because that would mean if for every dollar yuan they created, they would have to, maybe not instantly, but at some point have to have almost all that gold there as a reserve to say, hey, if one of my citizens wanted to come into the central bank tomorrow and say, I have X amount of thousand yuan, I want two ounces of gold or whatever, or half ounce of gold, they have to honor that.
Oh, of course, absolutely. That's without a matter of fact. But here's the thing: Russia and China are actually the greatest gold buyers in the market right now. Their central banks are the greatest gold buyers. So
Yeah, no, they are, but it's not nowhere near enough to reflect current money supply, if that makes sense.
yeah,
There isn't even enough gold. That's the thing. There isn't enough gold to buy to if they wanted to back their currency by via gold.
plus there's way
Something
too
like
much
that.
debt in the system as well. But,
Exactly.
rumor has it though, man. That's what they've been attempting to do, and yeah, I think it's just a big mess. Like all these non-government organizations pretending to be government organizations to issue debt in the form of.
What you think? What do you think about this? And we'll get. Let me get back to this chart because I have a question about this coronavirus stuff. I want to get your thoughts on that. But let me finish this chart up for the audience who's here just solely for the FX. As you can see, the euro pound this week we lost at this current rate. Again, I have it at 10,000 contracts or size. That's one mini. We lost 31 pips roughly. Again, if you just move the decimal place over, you would have lost 155 bucks if you had a lot on the table there for that. And then, and actually, no, I would have had to change the commission too. That's why I didn't reflect correctly. So it would have been $10 per trade. So we're talking about 317 bucks. But so that's that one, and then I think we didn't go through euro yen. Would have lost 93 pips on that this week, and pound yen 109 pips. And a big portion of that is because of the missed trade here. Well, not missed trade, but we got tapped out this long. We had the right direction, but got tapped out there. And of course, we already went through the British Aussie pound Aussie pair, which was a huge trade for us this week. So that's it. The 5 pairs that I have right now. I'm working on more since I have this thing automated now on my account. It's way easier for me to manage. I'm going to have it. The service is going to have it where when you sign up, we'll be able to actually have your trades automated too. It's going to be an additional cost for that, but there will be the ability for that to happen. I'm just setting up the infrastructure for all that now. But yeah, with the automation, it's going to be great because I'm going to be able to add more pairs. The more pairs you have trading, the better you spread your risk. And that's what you want. You don't want to just trade one pair, because if you're wrong, is nothing, you kind of out of luck. But if you trade 5, 6 pairs, man, you're going to do very well in this game. You're going to do very well.
That's good to know.
Yeah, absolutely. And that's even with if you're any markets that you're trading. You don't want to just trade one thing. It creates too much of a dependency on that particular trade to work for that particular asset. So if you can spread your risks out, it's going to help balance things out. Because if I weren't trading pound Aussie, I would be in the negative for this week. That trade really brought me out along with the pound dollar trade as well. So what are your thoughts, bro? We can talk about this now, man. This coronavirus thing, as I showed you on the screen here, and I'm gonna bring this back up. Man, this is crazy. This here table that shows the R0 for, and this is this has not been peer reviewed, this new report, but the R0 from this group, a very respected group out of Asia, R0 of 4 for this coronavirus, and a fatality rate of 6%, which sounds low, but when you have an R0 that big, 6% of hundreds of millions of people is a very big problem if this is the case. You know what I'm saying?
Absolutely.
What are your thoughts, man?
I think that number is actually somewhat suppressed, but Yeah, it's incredibly dangerous, this virus. And in fact, so dangerous that the Chinese Communist Party actually shut down their markets. They ceased all trading.
They did. It's opening up supposedly Monday.
I'm not for sure if it's going to happen, but we shall see. And the World Health Organization actually came out.
Yeah, the who is who.
Exactly, who is who. Yeah, they came out and declared this a massive emergency. Not necessarily, an epidemic yet.
Right. They didn't. And this is the political side of this whole WHO organization. They didn't say it was bad for you for trade. Like, yeah, they didn't say.
Yeah, you're right.
So it's just like
they actually encourage travel still too.
Yes, they did. They did. Yes, Chris Martinson, Jeff. That's right. This is Chris Martinson's video. I dropped a link in the chat room for those who didn't see this particular one. This is a good one, man. He breaks it down. Like I said, the report is not. It hasn't been peer reviewed yet, but it's concerning, man. And I told the wife today. I said, yeah, this weekend we're going to buy some food supplies and stuff. You got to prepare before everyone else starts preparing.
Oh, dude, bro, it's just gonna hit the fan. Here's the thing: it's airborne. People don't realize that it's airborne.
And that's what I told my wife. She thought it wasn't. I said, no, it's aerosol. It's airborne. And so, dude, this is going to. You're going to see if the R0 is at 4 or even close to it, 3.8. They had a error range between like 3.8 and 4.1. If it's in that range, bro, by in the next 2 weeks, you will see in the United States, you will see tens of thousands of people with this virus that quickly at an R0 of 4.
Oh, absolutely. There's already been confirmed cases in over 6 states, so it's just
that quickly.
Yeah, just that quickly.
Yep.
It's only a matter of time. It's outrageous. It's a biological weapon.
Let me listen. There's another thing I gotta show you guys. This is crazy. So apparently, this virus has HIV. Let me find I gotta find the article for you guys on this one. This is insane. This is insane. Give me a second. I'm gonna find this article. I just saw it, but essentially, let's see here. Here it is, right here. Boom. So, you guys see here. Look at this. Coronavirus contains HIV insertions, stoking fears over artificially created bioweapon. So that's so new research is showing that there are some. I don't know what that means. I don't have a background in biochem or anything like that, but I'm assuming maybe HIV, DNA, RNA, something in, I don't know. But let's see, it said over the past few days, the mainstream press has vigorously pushed back against a theory about the origins of the coronavirus that has now infected as many as 70,000 people in Wuhan. And I've heard 100,000 now, actually. The theory is that the Chinese obtained coronavirus via a Canadian research program and started molding it into a bioweapon at the Institute of Virology in Wuhan. Crazy.
And it was released onto a market.
Yes, because I did hear that this institution is near Wuhan.
Yep. They're actually Chinese.
And I'm just dropping a link for those in the chat room.
Okay. Well, they're actually Chinese biochemists that were working in Canada at the time. And they smuggled it. They absolutely smuggled it. Because China didn't, in Wuhan, they didn't have level 4 lab required to operate at the time. And then once they did get the lab, they actually took the research back to Wuhan. And
So it says here, this is crazy, an uncanny similarity of unique inserts in the 2019 nCoV spike protein to HIV-1, GP120, and GAG. Not sure what none of this means. Indian researchers are baffled by segments of the viruses, that's what I thought, RNA, that have no relation to other coronaviruses like SARS and instead appear to be closer to HIV.
Exactly.
Virus even responds to treatment by HIV. This is crazy.
Dude, it's absurd, right, dude? This
is crazy.
Perfect, dude. It's just the perfect virus to literally mutate on the world stage.
We all gonna have a Magic Johnson.
Bro, you crazy?
we about to have a Magic Johnson, people.
Man.
Oh man, I'm gonna have to get up and do a speech and say I'm retiring from crypto, and because I've contracted the airborne
HIV. Yo, dude, you ridiculous. You know?
Oh my God, bro, this is insane. This is what we're dealing with here, people. This is what we're dealing with. So, yeah, man, I don't know what's gonna happen. Hey, listen, and I said this well before I heard anyone else saying this. I said this could be the black swan for capital markets. This could be it, man. This could be the end of the Fed put, you know, the low repo market and low interest rates, negative, you know, all that stuff, man.
Yeah, you're right.
This could be the end of it. They can't print themselves out of this.
They can't. It's impossible. This is probably going to cause the epic slowdown and crash of today's markets for sure. I can see that, but I'm not trying to like do like a bunch of fear into people.
Me either.
Yeah,
no, I'm not either.
That's one of the reasons why like I'm not even talking to it about my family, man. I'm not talking about it to like anybody else. But here's the thing: the idea is that this is going to create, you know, let's say the extinction of mankind. No way.
No.
There's so many companies that are working on solutions right now, vaccinations and all that. Yeah, like.
No, I don't think. Yeah, I don't think a vaccination will probably be available very soon, in the next 6 months. But in that meantime, in that interim, you know, you may have a couple 100,000 or even 1 million or so people pass from this. So I don't know.
You know, actually, Bill Gates' foundation did a model on the effects of the coronavirus, this exact strain, saying that it would kill about 65 million people worldwide.
Yikes.
Yeah, no, dude.
Wow.
So
that is crazy, man.
I'll see. I'm just glad I am where I am in life. So.
Yeah, man, that's crazy. That is absolutely crazy. So I didn't even go over the algo for my crypto side of things. This is Ethereum. We went long yesterday, and the markets turned down. Tried to tap us out, but didn't get us. Got very close. That's what these markets try to do, boy. Especially in crypto, they are something else. Those crooks in crypto, those whales, man, they really try to get you. So we're back up. We did take some profit actually yesterday. We took some profit yesterday at, let me see. You guys may be able to see. Oh, I'm not even on my screen here. Let me see where we took profit. We took some profit yesterday at about 11:30 or 10:30 yesterday, which would have been around here. Yeah, 21. At 21, we took some profit off this long. And we're still in this position, so hopefully we can head higher. However, our Bitcoin position, well, we got stopped out of our short here, so we'll be looking to go long soon, I'm assuming. But we did have a nice long trade all the way up here.
Dude, ETH is showing some teeth right now.
I know. What do you think about Ethereum as a what do you think its value is going to be, its utility, I should say? I don't see it being used as what it was intended to be. I almost see it's going to be just another speculative asset like Bitcoin.
Nah, dude, impossible. Nah, smart contracts are incredibly lucrative, and it's a complete skill at this point. If you can code Viper or Solidity, dude, you'll never be out of a job, bro. You can make 150 grand a year plus. Like, dude, plus they need people to audit smart contracts. Not only that, like these applications that are integrating with smart contracts.
But what you're conflating is the fact that when I don't know if you understand this part though, 10 pound, is that when Ethereum moves over to 2.0, the need for the ETH token will drop drastically.
Why? What do you mean?
You won't need you'll be able, for gas at least, you'll be able to use other tokens on ETH 2.0 for gas. You won't have to use the ETH token. So I don't know as far as staking as far as like dApps, how that plays out, if you'll still need to only be able to use Ethereum.
But ETH 2.0 is also going to put a cap on its max supply. Right now, there is no max supply. So it's going to be a severe supply shock as well. So I think that could cause
that may be. Yeah, there will be a cap, or they're trying to head toward that way. Yeah.
But they have to if they're going proof of stake, delegated proof of stake.
No, they're just going POS. They're not going DPoS.
Okay.
Yep. So there you have it, people. Want to shout out to Will45 out there. Thanks for checking in this evening. If you guys missed anything, definitely catch the I would say after about 10 minutes, 15 minutes in, we started really getting into the charts. So maybe I'll do a timestamp and pin that for you guys. But yeah, that's pretty much it. Anything else, 10 pound?
Oh no, bro. It was great chatting with you. All right, take it easy.
All right, bro. Thanks for the call.
Yeah, bless up. Peace.
Yep. So yeah, if you guys want to call in really quickly, you can. If not, we're gonna wrap up here. Don't forget to hit that like button, subscribe, all that good stuff. And if you want access to these charts, sign up for the Quant Gang membership on YouTube. You'll get access to the charts, so you can kind of, if you want to manually trade, you'll use these charts to help facilitate that, give you a great edge in knowing which direction the markets are heading for sure. And you also get alerts to your Telegram app. So Christopher Lass says definitely DeFi. Yeah, DeFi is huge, man. DeFi is huge, and it's going to continue to get bigger for sure. That is the future of banking, a future of financing, and I'm excited to see how things pan out with that. So yeah, that's pretty much it though, ladies and gents. Thanks again for tuning in tonight. I will check y'all later. We're doing Off the Chain tomorrow night, so definitely call in for that. That'll be at 8 p.m. Eastern Standard Time. Have a lot of fun. I don't know, I'm not gonna reveal who the co-host is right now, but you guys will definitely enjoy. All right, I'm out of here, people. Holla.
I'll write it and we'll do it live.
Okay. Ready?
Fucking thing sucks. We'll do it live.
Okay.